Okay, hi there, guys. Can you hear me loud and clear? Just make sure I'm going to the right spot here. Yep, good. All right, who we got in today? Hope you all had a good weekend. Been playing around with my system, so I just want to make sure that we're all beautiful. Bobby, g'day, mate. Right, let's get up and running then. Welcome, guys. Again, anyone that's new, welcome. Welcome to TradeSetup. You'll see all the details on the screen there. Top left-hand corner. Join us at Twitter. I'll repeat myself a bit on this, but I thought I'd keep going through it. Top right is on Facebook. Twitter is the most important. We put up bits and pieces on Twitter. So follow us on Twitter, like us on Twitter, share the word or spread the word and share the love. G'day, Sharon. And general advice warning is right there as well, what you'll see on the screen. So we don't give specific advice. It's just our opinions on the market and what we see happening on any trades that we've got up and running and what we see prospects wise. Bottom right, you'll subscribe to us on YouTube, which is probably a big thing too. You'll see pop-ups every now and then when we go live and other things. It's not in particular, it doesn't have to be a trade setup live stream, but you should get those as well. All right, let's get started into the markets now. US, obviously we all saw that got creamed on Friday night. It's mainly the equities. I thought it was a relatively muted reaction across the board. We saw, so what it seems to be the case at the moment, the bonds are more obviously fixated on not so much what they're talking about, whatever comes out of Trump's mouth, but it's more got to do with interest rate rises. Now, the payrolls, which is US employment, the number of new jobs created in the US, that's the biggest number, pretty much one of the biggest numbers coming out there in the US. That's once a month. I think it's the first Friday of each month. And that was last Friday. Now, they were expecting up 180 or so, and I think they got 108, up 108. So not quite as many jobs as originally thought. Now, that's probably more negative towards interest rates, as in obviously the big thing is now whether they have 3 this year or 4 this year. That's what the whole market's sort of gearing up, and they're looking at what numbers are coming out in the US. That's aside from all the rubbish on trade wars at the moment. That's still the underlying strength of the economy. The economy is still going well. Now they also had who's the Fed Reserve Chairman? Powell, the new Fed Reserve Chairman. So that wasn't so good. Um, for a potential fourth interest rate rise because it's showing that inflation is probably not quite as strong. But it had they had some other numbers out. Now I forget. Average hourly earnings, which was a bit above forecast. So that's sort of saying the opposite. So it's a bit of a mixed bag. Now Powell come out and said they expect inflation to pick up. So if he's talking spruiking higher inflation levels in the US, it's a bit of a heads up that potentially a faster pace of interest rate rises. So that's one thing that was on Friday night, and that's probably not so bad. In all honesty, it's not so bad for the stocks. Wouldn't be so bad because they can continue along the merry way. You've got a whole lot of reporting season, or the reporting season is coming up in the US, and that should be a lot better than expected. So that's all on the cards. But the start of the market was just your typical, argy-bargy between the US and China, which is really the markets opened, headed south, and just really didn't look back. It did get down 700 on the Dow, I think, at one stage, or roundabout, bounced back up to finish down about 500. So it was a big night on the downside, which is more again, it plays in the fact that the market's been going up so hard. We're now in that all the bears are coming out, putting their bear suits on about what's happening in the market and really bearish on their outlook. Then you've got the bulls. So there's still that fight between the bulls and the bears at the moment, and that's brings in volatility, brings in everything in the markets. Now, it may or may not. I still believe that with the not the interest rate rises, tariffs, that it's going to take a while to play out. And I think the effects from any news or any talk from Trump or anything that he's saying, I think look, the way I'm looking at what he does, his approach is talk it up bad, and then that's the bargaining tool. That's the way he plays the game. He'll come out and talk it up. We're going to slap tariffs on you, blah, blah, blah. Here we go. This is what's happening. And then negotiate from there. So it's from a position of strength rather than going to negotiations on the back foot. That's what it seems to be his play, and I think China are pretty good at that too. So they've come out and said, we'll do whatever you want. Um, we'll play the game. We'll slap tariffs on you. Let's go. And I think that's what's obviously spooking the market. But generally, that this could go on for a while. It can go back and forward until something happens. I don't think with tariffs they want to start hitting up each other with tariffs. It's not the best thing for either country and the global economy. But the negotiations is the big key now, and I think it's going to take a while to play out. So you're going to get people obviously nervous about the market sell-off, and every time it does drop 500 points on news like that, it's going to continue to do that. It may get less and less, or more muted reactions as time goes by, and the fundamentals, the underlying market come out. It could play into the hands of you get a stronger reporting season. The market's getting hammered beforehand, and then stronger reporting, people start buying up. Buy the dips type of mentality, or buy something that's coming out nice and cheap. So it might start supporting the market that way, and then look at back to economic growth and plug away there. We'll have to see how it plays out either way. But our market hasn't reacted the same. Let's just get it up now. I'll just adjust the view there, don't I? Yep. Transition. There we go. All right. So this is the XJO. It's down. What are we? Well, pretty much flat for the session, I'd say, from Friday's close. Now, after a smashing on the Dow, you would have I was expecting more of a 30-point drop on the open, according to the futures, where they closed on Friday. Instead, we're only down about 10, 11 points, I think, on the open of the XJO. So they had a bit of a bounce back on the futures when they opened at 9.50, and then the market finished opening about 10 past, 11 past 10, 12 past 10. And they weren't quite as negative. So they tried to tip over a bit on our market, and it's bounced, and it was in positive territory, and it's just oscillating around where we closed on Friday. So that's not a bad reaction, I would say. It's a bit, it's not what everyone expected. And if we get over to, well, let's just look what Asia's doing as well. It's the XJO. I'll keep grabbing Nikkei. Again, the Nikkei is not too bad. The Hang Seng's not too bad. Well, the Hang Seng's actually up. So just looking at, I'm back on the weekly, aren't I? Nikkei, let's go back to the Nikkei. So all in all, it's seen, maybe it's more localized to the US, and the US is the one that's gone the hardest. The markets that have gone the hardest. We really, over this time when the US is hitting all-time highs, we're struggling. We're still, around 57 to 5,800 all-time highs, 1,000 points up. We're nowhere near it. We haven't made back those highs since prior to the GFC, or after the GFC, sorry. So our reaction is going to be a bit more muted to the downside, I would suspect. And we'll just have to see how this, how support goes. And we're sort of in that zone we were talking about for a while on the weekly, especially around that 57 to 58, just hanging around in there, holding this uptrend. Actually, let's just mark it up to see if we're still intact. I'd say we're still intact. Nothing's much changed. It's not what I want. I want to make that a bit thicker. Let's just go there. So if we just take it pure technical point of view, look at that. I mean, everything's, I kind of like that. I haven't noticed that. Look at where, or everyone knows the way I'm looking at stochastics, the actual effort it's taken to push the market down from highs to lows. It's sellers taking control. We've got to remember this is an uptrend. You've got a high low here, you've got a high low here, so you've got one leg up, pull back, one leg up, pull back, one leg up. It's in a prime position to hold this trend up, and look where the stochastics are. It's taken a big whack after everything that's happened. In the US, the meltdown, we got smacked a few times. We're still holding above that anchor level. So until that breaks, this longer term weekly trend it hasn't changed. It's still just in a bit of a pullback mode. So you're going to cop a bit of choppiness in the daily, which we've seen. It's been a choppy market. It's been a real tough market, actually. You can get into a prime setup, it goes in your favor, and then all of a sudden it turns around and just the market gets knocked on the head. We sell off, and anything great just turns, I wouldn't say to shite, but it rolls over, and it either comes back to your entry or you're under pressure. So it is a bit of a choppy market, and it's hard to get those runners, which we've seen in the past when it's a bull market anyway. But in saying all that, it's we're coming to that prime zone, and this is where I've really got my eye on. Maybe mainly weekly, just to see if it can hold up in here and we can start to lift from here. So that weekly is still well and truly intact. And it probably goes to say, look at the on the daily too, that the strength we've had these moves down on the stochastics, they're starting to line up a bit. I mean, not saying that we're definitely going to go up, but as we hold up, when you're looking at both at the weekly and the daily, the probability for me, obviously we know the way I assess it, probability is higher for a move up and this weekly trend holding. But I think it's obviously still got a bit of work to do. You've got to move down here, a move down here. That's your secondary. Well, that's your one. Probably got a bit choppy here. Secondary move down. So we've had those two major moves down, corrected a lot of the price action from off these that anchor level around 56.50 on that move up. And that could be what we need. It's going to take a long time. I'd suggest it's going to take quite a bit of time. And that you can just see, even if we start holding a high low on the daily, it's a long way up to really, we'll just draw that. This is your move down in essence. We've got a long way up from here. We can actually, pull back up, roll over, and then start holding a high low. And that's all going to take a bit of time, which is fine with me. A bit of time in the markets. It's still going to be a bit choppy for a while, I'd say, but I'm still eyeing that longer term, that weekly chart to hold in that prime zone, the daily to potentially hold up here, and then hold some high lows. We really need to see some high lows. If we get a good reaction up from here and we start getting this type of price action, which is not very good, and you get this breakdown, then we could actually head lower. And that's where we'd be scared, because you'd be breaking out of that weekly trend up and really correcting that weekly trend, which means a long time potentially on the sidelines and seeing choppy price action. But we'll see. What is everyone else's thoughts? People are thinking we're generally looking to hold up here. It's probably after today's, after a 500 point drop in the Dow, and we're break even, we're even slightly up about a point today. It's looking to me, I mean, if you're nervous, if you want to sell, I'd suggest a lot of the selling's been done. If there's further selling, it's probably people who have just been jumping in and out. It's more your shorter term, really short term trades. I think a lot of this buying up, say above 59, has been cleaned out with this move down. Initial buying with this stab down here. As soon as we break through that low with these two red candles here, that's taken out a lot of this late buying. And then I think once we popped up here, probably potentially when it's held it in here, is been under pressure, been squeezed back out of the market. So if you're buying through here, you're still up slightly, in general relatively terms, I guess. So it's really been a lot of people being squeezed out of the market, and you can see that by the reaction today. We just have to see how it goes. Got flies, little fly. There we go, got him. If you can hear my hands clapping. So yeah, that's sort of the way I'm viewing the markets at the moment. As opposed to the Dow, where I'd like to see this hold up. Again, it's got a lot of work to do. This is your Dow on a daily. It actually doesn't look too bad. Let's just break that down a bit. We've got it here. So it might be light at the end of the tunnel. You can see that's contracting. We need to really hold up above that 23,250. Don't get me wrong, it could easily spike down, wash it out, which the US can do quite a lot. You can see it's spiked down, and you've got this drop here, spiked through that low, touched down on the other major low, and then bounced off there. So the market can easily spike through. This trend is not over. Really, you've got this probably more of a major level up here than a lower high. That's your major key lower high at 25,750. So it's got a long way to go before we break up and out of this trend and start resuming an uptrend. So it could easily just contract, find a base, find resistance, find support and resistance, and just start chopping around and consolidating through there, and spend the next good part of 6 months to a year just doing that if it likes. So we'll have to see how this plays out, but it's not bad price action to see that it's holding up off that low, but you want to see some high lows. I'd like to see it pop up out of that contraction. By contraction, I mean pop up out of there, and then potentially just it can go back down, retest, hold the high low, and then work its way up from there. But again, that's all it's a lot of time to go under the bridge. A lot of water to go under the bridge, isn't it? I've got to get my stains right if I'm going to use them. Anyway, that's your Dow. Pretty much the same on the US. Sorry, the S&P. FTSE had a bit of a push up on, was it Thursday? Not looking too bad then, but it's the weekly. Yeah, the weekly, nothing's much has changed there. It's still looking, well, it's got to hold a high low for me to be confident about that. DAX is still holding up there. It's down in that important level. It could just keep chopping it, keep hammering it, putting the pressure on. Then you're going to get a lot of retail traders going to be nervous, looking for it to break, edging out of positions, see it hold up, get back in, see it get under pressure and get squeezed back out of the market. So the market can just chop people when you're at these levels. So you just got to be careful. If you're going to jump in and you've got tight stops on it, you've got to know exactly why you're jumping into the market, and exactly know what the overall market's doing. Hasn't, I mean, for example, the DAX hasn't come out of the woods yet. It can easily roll over from here, take out the lows, and then we've got it's going to be a lot of pressure on the downside. And that could extend, can get down to 11,000 quite easily. So you've got to know exactly what the overall market's doing if you're trading, say, the DAX, the XJO, the longer term charts. So that's why I like to go over those weeklies, especially on the XJO, just to see where we're at and what the daily is saying in conjunction to the weekly. Okay, at one stage, the weekly was looking like it's holding up. It was coming into support. The daily, so the weekly was up, the daily's down. They're not matching, so your best is to be tentative. Now the daily potentially is getting to that point where it could get bought up on the daily. It could start to hold. And then you want to start looking at some good quality setups from there. All right. Any questions, guys? I'll get into just some stuff potentially looking at. I just saw this one today. So we've got SKC. I only just saw this before. Not so much. Actually, it is that, isn't it? Look at the weekly. It's been a long grind up on this. And you can see recently from probably 2016, we had this big push down towards the end of 2016, held up on this support. It's pretty clear through about 330. We popped up off the slip. So previously that was pretty much the anchor to this longer term trend up, pushed up, come down, retested 330, popped up, built a lower high, come down and retested. So at the moment, we've pushed up off 330 again. We haven't got anywhere near this 440 zone. But if you go down to the daily and the weekly, the dailies, you can see that's the most recent test of 330, and it's starting to lift off here, potentially getting buying support at high lows here, high low through here. Even after gap down here, that gap down to that level and got bought up quite strong, had another push down to say 350. So it's all high lows off 330. And we just got this 360, this high low starting to work up. So if we can get up and through, say 380, you just want to start to see if we can accelerate from here rather than just be a bit of a grind, pop up. And if we can get up, hold this high low and get up through these highs, say around 380 to 390, then you might, if we can see some acceleration, you're on the right side of the market. It's getting supported by some buyers, but that's one that's popped up on my radar. The weekly is not the best, but it's this line in the sand, that 340 or 330 zone. The fact that it's tried a few times to go through there. So just got to remember, if the market tests it and fails and it comes back for another retest, you're going to get buyers going to start buying it up off support. Whether they're looking to, they don't know, shorter time frame, mid or long term frame, you don't know. But the third time lucky, they're going to have a bit of a dip at it, maybe build a position, and then you're getting that high low now, which is showing some buying strength. Hasn't confirmed anything just yet, and I would like to see more of this kind of action, a spike up, then pull back to build a high low. If that's the case, that's showing a lot more strength than just this grind at the moment. There's something I've just got on the radar. New farm, another one I sent out as an alert before. Look at that weekly chart. I like the weekly chart. I think I'll draw it up, but I'll drop it back a bit. It's the latest price action. I want to go, here we go. It looks good. Has anyone been watching New Farm? Now you've got this move up. We were looking to short it somewhere around here. We were looking for that move down, looking originally for around 770. I think we got to 780 or so. And then we bounced up. So that's not too bad considering you took out that lower high. That's your secondary move down. It started getting it held up around 775, a reaction of 775. Then what we've done from there is we've come down and retested that support zone, and we're starting to lift now. Now, right here, it doesn't look that crash hot from the weekly, but this is why I like to do my sloping resistance lines to see what's happening. If we're starting to break up, that's, if you've been listening to me for a while, that's what I'm calling contraction. Contraction off the highs. Contraction off the highs, you always want to see, if it's a long-term bullish market, it's good to see this type of price action where it's contracting off the highs. You've got this move up, it's contracting, but it's been staggered. Does that make sense, guys? So when you're seeing that type of action and it's more controlled, that's where I'm always looking for that lower high. You're looking for a push up out of contraction, sorry, a higher low to build, which I think is what it's starting to show signs of doing on the weekly chart. So we can drop down to the daily just to see where we're at. But that's ideally what I'm looking for. So when you start to break up, which we've done just here recently with that push up to 9, it's showing to me that this is a good solid zone, 775. We could easily just come down and just sort of bounce between 9 and 775 and just do that for the next 6 months. We don't know, but that's why I'm always keen to see that high low. And when we break up through 9, I'd want to get on board to see if we can push up to the highs and see how much you can get out of it, because that's not a bad little contraction of that longer term trend higher. Let's go to the daily. Oh, does that make sense what we're seeing? So this is the price action. It's the weekly that I'm inclined to. I like the weekly chart, not so much this daily. I don't think this has got the oomph to go from, a high low of 830 to spike up through 9 and then get on board. I think the weekly's actually, you can see it's a bit more towards overbought territory. So that's why I'm backing a bit of a contraction lower and then start to build your major higher low. Does that make sense? Anyone got new farm on the radar? All right. Great work, Bobby. I thought everyone got to sleep there for a minute. All right, just start putting in some codes there, guys. I've got a couple more I'll just go through, but why we're having a look at some others. I've got wrap I just want to go over. I know someone may have it. Laurent may have it if he's in today. Bobby, I'm not sure if you got wrap also, but just put in some codes if you want to look at something, and we'll get into those. While I'm banging on about wrap, I really like wrap. Now, I find this interesting. Um, anyone that can sit there and honestly say, this is why I've always lent towards technical analysis rather than fundamental analysis, because fundamentals is good to know at longer term it's doing. If you can hold it longer term and you've got, I'd say deeper pocket. Great work, Sharon. Where you got it from, Sharon? Personally, I'm in around 11 cents, so it's got up to 7.5 before it closed off today. It's on a trading halt, by the way, if anyone doesn't know. Um, so it's actually had this little pop up through 13. I was going to send this as an alert, to be honest, when it traded around the 13.5 and have your risk around 11 mark. To be honest, I just missed that. Kicking myself for missing it. And then you had Friday, a big reaction up. So you've got 1, 2, 3, 4 days. It's gone from 12 cents up to touching on 18 cents. So what's that? It's 50% rally on wrap. Now they've gone into a trading halt. And I think someone asked me on the Discord, do you think it's going to be positive? Should we be worried? I mean, in all honesty, if it's popped up like that hard, I'm not going to be too concerned about it. I'm not sure what the news is. It's meant to be potentially coming out of a trading halt between now and Wednesday. Maybe Tuesday, potentially Wednesday morning, it might come out of a trading halt with some news. Yeah. So just keep an eye on it. Wait to see that news come out there, Sharon. See what happens on the news. But it's interesting. It's interesting to say ASIC have got their job. They've really got their job cut out for them. When you can't tell me if someone knows about this, why is it gone up from 12 to 18 cents? You got this little spike. Always find that interesting that someone's known something pre the. I mean, why would you close out if it was a good announcement? You're more inclined to buy and top up, wouldn't you? Yeah, That's what I'm leaning towards, positive news too, Sharon. I think especially the gap up today. Look, 15 to 16 and a half, gaps up, trades at 18, hovers around 17 and a half, then they go on a trading halt. Sometimes I've seen this kind of thing before. It can ramp up prior to a capital raising, but not to the extent that we just saw today. So either way, it looks good. That last, you can see that price action. So it's gap down. That's if you followed the story, they had obviously bad news with testing results. Testing was carried out the wrong way. Crappy testing results. Gap down from 30 down to about what 10, 5, 6. So I bought some in there in the first couple of days and got some on the pop. Excuse me, I'm going to probably sneeze. Whoop, might be one more coming. Excuse me. All right, so made it on the pop there, but I actually held some from up here as well. So managed to lower my average to about 11 cents. So it's going okay, but you can see that it was kicking up here, then it slowly got sold down. So there's a lot of, you probably find it's still going through here. When it was more the unknown, they weren't sure what was happening with the testing. They weren't sure what's going to happen in the future, um, whether it was dodgy testing results or just the results weren't quite good. And as the company started releasing news about what was happening, they were going to redo the test. Of course, redoing the test costs, redoing the research costs a lot of money. So that's the other factor too. And that's why, and then I think the government came out with, gave them a reimbursement or a tax break or something like that, which helped to pay off some of the retesting or for the dodgy, I guess, the procedure that was carried out on the test. But anyway, I'm getting aside from myself. That's either way, the price action is holding high or low. So if you're following the story fundamentally, I don't know what you'd be doing about there. I still like the fact that it's held a high low in here, which is great price action. Um, Great structure, great price structure, especially when you had this little spike up. And instead of coming back down to the lows like we did potentially here, there's a little spike up. That's more of just a reaction. That's an opportunistic buy. Nothing was happening on the news front there. And then we back down, you pretty much come right back down to that, was it 6 mark? Close to anyway. That was too much of a correction. And then the next move up really was sedate. It had a bit of a pullback. There was nothing happening here. Then you got a gap up, news announcement, I think, bit of a pullback, and it started holding high lows. And the pullbacks weren't as savage. They didn't quite come back. And then you got this good run up through from say 7.5 up to 15. And of course, the heat came out of the market, but it retested the highs and it was holding high lows over this weekly chart, of the daily, sorry, looking really nice. So on a weekly, it could extend. I'm just interested to see if we can get right up towards that 27. It's all dependent on the news. It could easily just pop up, have some really good news, bang, up she goes. So just keep an eye on that, Sharon. We'll see how that one goes. I like that. So I'm holding my breath as well, just to see what the news comes out with. It's actually quite good. I don't want to see this as buy the rumor, sell the fact, but even if it is, I wouldn't suspect it's going to drop that hard because there'd be a lot of people that don't know, if that is insider trading. If people did know what was coming out prior to that, I think the second bout of good news, well, if it is good news, it does come out, you would expect the second bout of buying to really give that a bit of a nudge, looking for a potential gap close up towards that 25 to 30 mark. Still a lot of fat left in that trade if that's the case. All right, let's get into it. We got Sharon want to take a look at Elders and FMG. All right, Elders. Yeah, that's getting a bit overcooked at the moment. And just look in comparison, I mean, I know just go through. This is why it's handy to get an idea of just what's happening in the price section. Just look what's happened in the past. And I'm always looking to see what's happening on stochastics to see what sort of pressure, in buying pressure or selling pressure it's taken to get to the current price action where we are. So if you just go back, I'll just draw that up. You see this move up, it got to about 550. It was overbought at that time. And you got a good sell off here. That coincided with the stochastics just dumping, going to the oversold territory. It had a bit of a push up, and you can see that's quite good pressure from going from oversold towards the overbought mark, and the price really couldn't get too far. It wasn't vertical, and that's what you expect from a very positive market. Instead, we're getting this type of price action. So if you bought it around here, for example, you'd just be questioning, oh, what's happening? Maybe we've got that secondary leg lower. We always talk about this, move lower or in two stages. So if you're getting, when the market's bouncing, it's around here. This is the area we're talking about. If it's bouncing, so this is on the weekly, say, we're getting that little pop up, but it's broken down onto the shorter time frame, maybe on the daily. It's a bit like this. It's going to get you concerned. And of course, we had that deeper sell-off. All right, then we had this little pop up. And looking at the stochastics again, it was an oversold territory. Good, strong move up from oversold to overbought. Couldn't get much further than 5. All right, so you've got to look at that and go, oh, what's going to happen here? If you were looking at it just at this point, which was, say, somewhere around whatever that month is, I haven't got it, start of October last year. All right, so that's the start of October last year. So you've got to question, oh, we're going to see further weakness, and we're going to head down, the market's going to capitulate, we're going to head down to 4, we could go lower. You don't know what's going to happen from there. So you just got to give it some time. You just wait for your setup, see what happens. Instead, the market just went sideways, which is ideal when you get heat coming out of the market, a bit of selling pressure coming in, but it's getting soaked up. So when the market's moving down, stochastics, I see it when they're moving down, that's selling coming in. The buying's running out of steam. The selling's starting to come back into the market, but it's getting met and it's getting soaked up by the buying because the price is actually not going anywhere. So when you get down to, say, 50% on the stochastics, you go, okay, now they've got a lot of room to move on the upside, potentially go back to overbought, and what could happen? Of course, this is broken up. Potentially you've got a nice little setup just through here, and then off she goes. And just remember, when the market does get to, it, just because it's going to overbought doesn't mean it can't stay there, which you pretty much saw from about here onwards. It edged up to overbought. But then when you get that acceleration, you can see the candles are getting bigger. There's more volatility in the market. It's gone boom, boom, boom. It's just kicking up quite nicely before it really got to overbought, but it hovered in overbought, so somewhere around here. It's got this rally, this big block of rally going from overbought somewhere around here and overbought somewhere around here. And then you can see it slowly, there's a bit of selling starting to step in, probably profit taking. The market went a bit further, got up to just below $9 before we had a big correction. And you can see that it was hard to take. I mean, if you were long late into that move, you've got to question why you're long late into that move. If you bought it somewhere just above 8, because that for me is way too extended. It's had a strong move up from, say, below 5 all the way up to nearly $9. And if you're getting in somewhere, when it's moved off $5, somewhere around 8, you've got to question why. You've got to have really tight stops. So your first sign of really weakness was when markets pushed down, popped up, got that lower high. Let me just mark this up thicker. We're talking about this lower high in here. So you've got, here we go, this little lower high. So we've got up, little lower high in here. You'd want to be having your stops really tight. If you bought it off the $8 zone, in this chop in here, maybe minimize your losses, lock in a break even, or small profit. You don't know where everyone's situated at the time. Just pure and simply because you potentially laid into that trend. Now, what we saw from there is that the market's just rolled over, some good sellings come in, and you can see the market's head down, pretty much started reacting, some decent reaction off the 650 mark. Now, there was no support, nothing really in there. The market's taken it out, but now you're starting to see some different price action. It's changed from just outright selling to people starting to step in. And I mean, this is not, I don't quite like this type of price action, but you can just see the difference in price action. As soon as it started, it got down to about 660. You get a couple of green candles, then boom, a nice green candle. It's obviously head down, took out those lows, popped up, it's got a lower high, took out the lows. But the fact is that it's not in a free fall anymore. You're just taking out the lows and you get a good reaction back up, a touch below the previous lower high. And then we took out the lows again. So that's a bit of a heads up, like, okay, but we know buying stepping in. Why is buying stepping in? Potentially because it's a 50% retracement of this move up. So it's in that zone where it could easily start to see some buying tick it off. And it was only really, clear that up, about here when you got that move down, popped up, took out the most recent lower high, pulled back, built a higher low, and then we've gone up from there. All right, so this pattern is it's a nice little pattern that's showing some buying strength starting to step in. It's not clean. It's nothing that I really like to see. I wouldn't buy it obviously up here because who's to know this is the start. This is your one leg down and this is your start of your secondary move down. Like we always say, longer term on the weekly, we could be, just take that one step back. We could be at the start of your secondary move down if this is going to be a lower high. So the price action I would be looking for is, just imagine that's your high up here. I want it to come off here. I want to see buyers start to step in. Some more evidence of Biden starting to step in. And then that way, 2, we've got the evidence. 3, skip number 1. We've got that initial push up. That's your first sort of sign. Hey, we've got some nice buying through here, building this sort of cup. Then what you'd want to see is a bit of a pullback potentially from these highs, pull back and then hold some higher lows again. That's your secondary move that, okay, buyers are happy to step in. We've got maybe longer term buyers. Maybe it's not going to be this. We're not looking for this type of move down, that secondary move down. Buyers are stepping in, they're supporting it at higher levels. Okay, maybe 725, 750. You don't know where it's going to be, if that's going to play out. And then you're really just waiting for your entry setup. And that's really in order to minimize your risk. All right, so right now I wouldn't touch it just yet. I'd be inclined to steer clear. I mean, if I missed the boat, I missed the boat. I actually did miss the boat through 5 a long time back, which nearly killed me. I think we had a little profit on that. We took it up through 5, it pulled back. Actually, it was right on this candle here. We got squeezed out of that. You can imagine around that $5 mark, made a small gain, and then we gave up about $3. So I don't like this stock personally. I've got history with it. It's like a bad girlfriend when you get dumped. All right, does that make sense there, Sharon? So from here, I think we're at that stage. I mean, if it just pops up, just creeps up to the highs from here, for me, too bad. I've missed out like I did. I mean, we did have the entry back here, but I've missed out. So be it. Look at something else because there's no setup there, and you're starting to get stretched on the daily, on the stochastics. You're back in the overbought territory. Potentially, we need some heat this to come out of this latest move up and get some more contraction in price where it comes to more of an equilibrium between buyers and sellers, and then see if buyers can tick it off from there and get this type of price action. Otherwise, we could just go boom, straight down. I mean, this could easily go from overbought to oversold, down to sort of your 20% marker. This market could just go boom, straight down. So just keep an eye on it from there. Exactly. But I just can't help hating ones that I don't get on board, especially when you've been watching them. But anyway, what was the other one? FMG. FMG is at that. Yeah, I'm not saying what to do or what you shouldn't do, Sharon. It's just that's the way I'll be playing Elders. Just stops it tight, see what happens from there. Where's actually? Oh, look, that's all right. I mean, all you can do is really, you don't know how long this leg's going to go. I mean, after looking at it today too, you don't know that leg's just going to keep ticking up and going from there. All right. So yeah. So I'm just going to get a phone call coming through. Just make sure that's off. No, we're not. All right. All right. So what was the next one we went to? FMG. Firstly, obviously, this looks like it's going down. If you just straight into the daily chart, the things that stand out most is that we're in that oversold territory. And you can see that big reaction up. We've got that push downwards, essentially just retesting those lows. We've got a reaction up. We got suckered into a long here on FMG, which is a shame. But anyway, you keep your wrist tight, stop yourself out, And in hindsight, that was a good thing to do. So that's why it's always important to know where you are wrong. And just be, and I guess that's one, this is probably a good example just to touch on that. It's just, I know there's people that buy and hold, buy longer term, you don't really know where your risk is. I think it's very important to know where your risk is. And this is where your stats come into it. You can just test, go through your setup, what you like and why, and know exactly where you're going to be wrong. If you don't know where you're going to be wrong, you pretty much, you can't be confident in your setup either, I wouldn't think. Because your setup's for a certain reason and you're buying it for a certain reason, and hopefully your setup's with strength when you're showing early signs of strength and you're like looking to take that you're looking like to go with the flow and take advantage of getting into the unknown for when others are starting to buy into it. They're starting to book your profits for you rather than you do the heavy lifting and buying in the known when the market's on the way up. Does that make sense? So really, if you haven't thought through your entry process and the reasons why you're entering, um, that's going to show if you don't know where you're going to get out if you're wrong. But if you know exactly why you're getting in, then you should know exactly where your exit is, and just honor that exit level, which is pretty much, I think for us, was just below that high low around 490. So got stopped out of there. The market's hit down to where are we now, 428, and taken out. It finally took out that lower end, the 450 mark. So the daily to me is just saying like we've had a good leg down. We've gone from pretty much 540 down to 429, 430, or even 420. So we're getting to that oversold mark. So to me, first glance is how much more selling pressure can come into that market. If anyone's going to be selling it here, because you know what people's mentality is. If they're bought at somewhere around here and they're holding on to it because they like FMG, they like the fundamentals for whatever reason, um, they're going to be looking at this too, going, "Oh, look, it's down and oversold. I don't know how much more selling pressure can come into it. I think it's going to bounce from here. Things normally bounce when they're oversold. That's your basic theory that's coming into it. I think I'll hold it." And then just waiting to see if it can bounce, and then okay, then they obviously have to make a decision from there whether they continue to hold when it goes from overbought to oversold. Sorry, oversold down here to overbought, and we only bounce to 560, say, and then to see what they're going to do. But right where we're at the moment, there's that case that we're starting to get extended on the downside. And you can see it's not even, but it's not far off. I might just take a snapshot. Oh, where are we? It's one thing I don't like that. So that's your leg down. We're from $6 to around 460. It's $1.40. Taken from the highs around 540. It should be somewhere around 4. So we could extend still to 4 if that's anything to go by, or even the time it took to actually get to back up to that lower high was probably less than that. So maybe it's a smaller. So it would all make sense if we do hold up here somewhere, but it also makes sense if we do spike down to say that 4 mark, because it's an equal sort of a leg down, and it's a bit more vertical. The gradient's a bit steeper too, so it could be that capitulation move. But either way, we're talking about the daily, and we're just trying to figure out by purely and simply looking at that daily chart, how much further we can go if we're right. So looking at the weekly to me is saying a different story. Okay, we've got to look at the weekly and look at what it's in context to, and it's obviously in context to that big leg up, this move down. So we've got this big leg up, which eventually broke. I think there was a major resistance up towards $7. It was major highs. Let's go back. Oh no, yeah, it was this high up through here. Hit a high of 734. We hit a high here of 727. So it basically on the weekly we just spiked up into those highs, and then we started holding lower highs. Good reason if you bought it somewhere off the lows around $2 to at least take some off the table, book some profits, because you're coming to a major resistance zone. And just to see what happens, if you're wrong and it starts holding a high low and going back up, you can always re-enter that position or that partial or whatever you exited and re-establish a full position to see if it can keep going up. But if not, knowing that we're coming to a key resistance zone and then we start breaking down with this move down, that's your key thing. That's your key push down. When we push down to 6, you'd be questioning that, going, oh, hang on a second. And then we build that lower high, I'd be exiting, especially with a push back down through $6 and then just waiting to see what happens, or if you want to exit more on a deeper correction to see how you play it. But either way, I get sidetracked quite a bit. We've got a major resistance up at 7. We've got the leg up from somewhere around $1.50, say. This good strong leg up. We really are just correcting that leg. You know, we don't know exactly what's going to happen from here, but if it is somewhere around 4, that would make sense. The weekly's gone from overbought to oversold too, so it's taken a fair bit of pressure to get down to sort of that 4 mark. We just really want to see if we're right. That's probably around your 50% retracement. $1.50 up to 7. It's a $3 drop here, so $1.50 to 4. It's close to a $3 drop. So we're probably right where we are now. It's a 50% retracement from that leg up. So for us, that's somewhere, we always like a retracement somewhere around 60 to 30. A 30% retracement showing more strength, but it's still, if it traced around 60% of a move, there's still potential to start building again and get a new leg higher, depending on which stock. So a 50% smack in the middle. So it's, for me, there is signs that we could be in a zone to hold up, but the price action's obviously, that weekly is correcting. You don't know how far it's going to correct. The daily is still heading south, so there's nothing to me to say just to buy it. I think FMG's got a lot of work to do before we start seeing some buyers edge back into the market and start to support these lower prices, or potentially supporting a higher low on the weekly. Does that make sense? So it's probably something on FMG to keep on the radar, but you know, I think if you don't look at it for the next month, I don't think it'd matter, to be honest. Aussie yen. Bobby, you're whipping out a currency. Actually, I can do that quite easily, couldn't I? Let's get here. Does that make sense on the FMG, guys? While I get the Aussie yen up. Have I got it up? Yeah, there we go. What do you want to look at, Bobby? Do you want to look at just touching on a daily chart or a weekly chart or half an hour? I've got the 4 hourly here. Let's look at the daily. All right. All right. So let's go back to a weekly. So on a weekly, oh, there's something else I had to do here, isn't it? So it's major contraction by the look of it. This is on a weekly chart. So we're just trying to get a, all right, we'll get down to the 240 in a minute. Good work, Sharon. All right, so Aussie yen, to me, that's quite choppy. And you can see it's come off a major zone there. I'm just trying to get a picture in my head what's happening. Yeah, either way. So you can just see it's moved up, had a good move up, good move back down, took out these previous lows, big push up to take out the highs, and then we just capitulated. Boom. I'm guessing that was a GSC. Yeah, that was a GSC. Absolutely had its pants pulled down on the Aussie yen. And then we've been building since then. But really, you can see we're just contracting. It's very long term, obviously, but we are contracting. We're finding a bit of a base through here, if we can draw that, if I know how to draw. It's worked its way off there. It's reacted off that zone, popped up to here, fell short of that high, pulled back, higher low, tried to go again, failed. So that was a deeper correction here. So you got this pullback. If it can't get through the highs, you can bank on a deeper correction, the longer term, and that's what's happened. You got your lower high in here. Would have been a nice little lower hybrid trade just in here. Had that pullback right down to, or close to, that recent zone, and the zone is pretty much just through here. All right. Does that make sense? So it's touched in this zone of around 73.70 to 72. Just bounced, pushed back into that zone, reacted off there. So we've got a good little reaction off there. All right. So if we just work it down to a daily, see if anything stands out. It's overbought, overcooked up where we are, so that would lead me to believe that this level is going to come under pressure, under further pressure, and we could be heading south again. There's a major level through here at around 81.56 day. So if it's going to hold up here, I don't like it because it is in that overbought territory, and that would play into the hands of being another lower high. You can see the market's moved down, reacted off that zone, and the fact that, actually I'll cut and copy off the daily. I find it easy to draw. On here. So you can see the market, it's this resistance zone. It kept finding resistance, pull back, took out the highs, but it didn't get much further than these highs. Pull back, took out the high again, didn't get much further. And then we started seeing some weakness when we got this lower high, this big correction. You can just follow. And when we've got this type of, what do you call it, head and shoulders, I guess people can call that. You got a shoulder, head, shoulder here. We got a break of this anchor to this move up. So if this was a strong market, you would have expected potentially to hold up and go from there. Instead, we've got this push down, took out the anchor, pop up, retesting, pretty much retesting those highs. So if you're looking at that stage, would have been a prime little entry just in here if you're dropping it down to say the 4 hourly or your 2 hourly chart, what you got there, Bobby. I think it's 2 hourly, wasn't it? Yeah, so that led to another good move down. But what we've done, that move down, we did react to, you can see it's reacted off that zone, quite good. We held a lower high, we popped through it. So for me, there could still be some weakness. I don't want to see it take out a level and then pull back. So I'm just trying to explain it properly. I don't want to see it take out this level. That's pretty much a washout at this stage. If we pop up a bit deeper, if we get a bit deeper, say somewhere up towards this resistance zone, then I would expect it to probably push down, retest that zone. And then if you're looking for the high low, you've got a long trade off this major support through around that 81.50 zone. Does that make sense? I'm talking about this support through here. If not, I would like to see a lower high. By lower high, I mean that. Get a short entry and see if you can press and wash out these lows, and then you can see if they can extend down towards that, and retest on that. And then you'll probably find there's going to be major buying through that support zone, and just continue that weekly trend. Go back to the weekly. This weekly trend up. So this could easily extend down, touch out this support. It's just we're right at a major support zone at the moment. Go down to 2 hours, go down to 4 hourly chart. So the 4 hourly is a bit, you can see it's working its way up. So the 4 hourly to me is showing that this potentially could take out this high. And I guess that would work into it. What do you normally trade off there, Bobby? Because I'm trying to get a bigger picture. G'day, Danny. How are you, mate? I'm trying to get a bigger picture. Actually, from here, if this holds up, say we extend up and we go to sort of that oversold, so up towards overbought, but we don't get much higher, I would potentially be dropping it down to say even an hourly chart just to see what the finer detail is showing. So just be wary. So we've got this major level, just remember, this major level at 82.50. And this could play into that daily chart where we said it could potentially roll over, hold the daily and weekly lower high, roll over straight down. So if that's the case, what I'd ideally be looking for here, just take a snapshot, is just building my position up here. So we've had this retest of the highs. Look at that too. We've also, so it was that, we've had that pullback, trade up to the highs. So that's when the first retest, we washed out the anchor. So when you wash out the anchor and you come all the way back to retest that level, it's showing you, and then you start rolling over from there, it's showing you weakness. So this is weakness here. So I would be looking for potentially that lower high and see if you can get, See if you can get some sort of trade like that. If you're showing weakness here, you're getting a lower high. We get to the overbought territory, but we can't get much more than, say, 50% of that move down. We could get that weakness to play all the way back down to that major support zone, which I think is around 81.60. So that could take us to 81.60, retest that zone, and then see what happens from there. But yeah. Good work. If you're in a pullback trade, just be wary that we could just be contracting off that high. We could be contracting and bang straight up again in a secondary leg like this, or we get some serious weakness. That's pretty clear as mud, isn't it? We're either contracting or we got serious weakness. So, but I just think there's potentially, if we do get that price action like that, that could be some serious weakness to take us down to 81.50. It's a lot harder on the because it's a lot important. It's really important to chop around, and especially in currencies, it's not as easy just when you go from a weekly to a daily. You've got pretty much two charts is all I use on your shares. On your currencies, you can chop around from weekly, daily, 4 hourly, 30-minute, 5-minute. You can do whatever you want as long as you know what context you've got. So if I was looking for that trade, I'm on the 60-minute chart here. I might very well go down to a 5-minute chart for an entry and just see if I can get this weakness play out. I've got this type of action I'm looking for. I'm looking for a breakdown through here and then my lower high, which just is this lower high here. That's what I'm looking for. But I'm looking for it on a 5-minute chart. And then I know exactly where my risk is going to be. I know what I'm expecting. I'm expecting a push down to here. I know what my risk reward. It could be 2 to 1, 3 to 1, 4 to 1. Don't know. But it's very important to know exactly what you're basing your trade off on what time frame. And I think it's very important to have an entry time frame, which is a bit shorter, to minimize your risk, to refine your entries, and so on. You do that a bit on the shares from a weekly down to a daily, but I think it's a lot more important on currencies. And levels are a lot more important on currencies too. They really push a lot higher. You get washouts of lows and they retrace. If I can just go back probably to that last chart. Where are we? Oh, here. See, it washed out a key level, cleaned them right out. That's your anchor level, washed out. But then we retraced all the way back up to that resistance zone, and then we found weakness from there. So they retrace deeper. There's a lot more action on the currencies anyway. So it's probably more important to be patient and know exactly what your time frames you're trading from. All right, sorry about that, guys. Got carried away on that one. ASL. Let's have a look at that one then. Ausdrill, is it? There's a few things I like about this, and a few things I don't. Let's start off on the weekly. Well and truly in the zone for a bit of a buy on the weekly. Might have to go back a bit more. So just remember, this is your weekly move up. We've gone from around that 25 cents up to $3. Really haven't corrected much of that at all. We had this little acceleration higher. It was back in 2016. Good correction. Started holding an inside level, which is in here, inside level, and then continued on a merry way to highs. But that whole move up hasn't corrected that much at all. Really hasn't corrected. We sort of went sideways in here, end of 2016, start of 2017, before we resumed that trend up. But we haven't corrected. So you just got to remember, we've had a good leg up, good strong leg up from around 25 cents up to $3. Right, so that's the one thing. If I'm looking for a buy up here, I don't like it from that perspective. It's really just going down to the daily now. Let me just make that a bit smaller. And what I'll do, I'll draw it from here. So nice support zone in here. This is when you got a bit of contraction in. We held a high low, then we started going up again. We're holding a high low here, popped up, pull back, high low, pop up. You probably would say that's not so much one because we just retested the highs, and then you got a bit choppier here. So I would suggest that's your move up, pull back, and that's your latest high low, somewhere around 730. Don't like that red candle there. This is on the weekly, don't forget. Don't like that massive rejection. So we opened up, pushed up, rejected it, and then potentially we could be building a lower high in here. You'd want to see the high lows play out. So you really, from here, just got to go down to the daily charts to see what's saying on the dailies. But just remember on the weekly, we're late potentially into this trend up. We're a bit late into that trend, into that move. How much more can it go to give us a good little profit? So if we are happy to get in here and take the risk, this is going to continue on. Your fundamentals might be saying it's looking good, it's looking great, it's looking strong. There's a lot more to go. There's people could be targets at 350, $4. But don't forget, analysts have a habit of moving. If they don't get it right, they move their targets. If it starts to look tentative, they continually move their targets back. So I think with technicals, you get the edge. But either way, just remember how much probability this is. What probability can you associate with this continuing to move higher? I wouldn't associate high probability either way, but let's go down to the daily now, check out what it's saying. Yeah, so I think all we're going to do is concentrate on that last bit here. So just remember, your weekly is on its way up. It's still holding. You've got a key level around that 230. We're starting to get choppy action now. Do I want to be involved in that choppy action where I can get squeezed out? The market could be heading south. We don't know what's happening just yet. But on the daily, I think you're going to be proven wrong if you're down, if it pushes up through. If you buy, I would be looking potentially this action through here between 260 and 273, say. It's sort of consolidating through there. It's not showing anything for me just yet, but if we pop out through the top side, it could be a buy, but just remembering that you don't know how much is going to be left in a move up. If that's the case, you're definitely holding higher lows through here. You can see this is your key sort of weekly anchor level. So there's nothing to say that we're contracting on the weekly, but the daily is beginning a setup, and this is where we're at the moment. So I would potentially buy on a move through here. You know where your risk is. You can have very tight risk just below 260, or widen it slightly around 250, which would be below this low. And then you'd want to be gunning for at least 290. If we react off that zone, if we push up into that zone and react off there, you might just want to close out. But just that's purely because the weekly is looking like it's getting, I don't like this rejection up here. This is what I'm not too keen about. All right. But potentially, look, it could be a buy. I don't think there's going to be, just by looking at the weekly and the action on the daily, I wouldn't suggest that there's much left in it on the upside. So for me personally, I'd probably be stepping aside and just looking at something else. I like price action that's, you might get that move up, a pullback. It's starting to show contraction, but you're starting to curve up. I like that sort of action, and then getting involved potentially before it starts to go. This to me is a bit different. We're sort of getting a bit choppy here. It's not a strong move up. Does that make sense? We're not really curving to the upside. We could accelerate if we get through that 275. You're buying on the break at 275, for example. We just stop below 260. We get up here, we can go smashing straight through it. You never know what's going to happen. So look, it could be worth the risk. I hope that makes sense, guys. Does that make sense to everyone? What it's just going through there, and that my tentativeness on that is more got to do with the weekly chart. We're potentially, and that big rejection to 3, potentially starting to run out of steam, which would suggest that even if it's a positive thing fundamentally, we may need to clean out some of these late buys on a macro correction lower before we start finding a base. It could be off 2, you don't know. A macro correction before we start holding and dragging in some more buys, something like this. And if that's the case, it could be 3, 4, 5 months in the making before we start heading higher again. All right, might have to call it a day there, but I hope that helped there, John. I don't know if you're long, short, going sideways on this one, but it's, the daily has the potential to break up through here, and away we go. And it's holding high lows, so technically everything's in play. If we go from here, if we roll down through 260, and break down through 260, I'd be inclined just to step aside and see what happens, because this could easily be a lower high, especially if we get down through that. I've got it drawn up, haven't I? Through this level, if we get down through the 255, break 260, touch on 255, that's to me is a lower high. I'm expecting more weakness. I'm sort of potentially looking for a macro correction. All right. All right, guys, any more questions before we call it a day on that now? No, I know there's a bit of delay here, so I'll probably just call it quits there. Yeah, look, that's a good point. And it's always good to take a step back to see what the weekly's doing, because you've got different time frames for buying. Some people might even be trading this on you might find there's intraday traders on this are looking at the exact same level, are looking for that squeeze up through 270, and just might be buying it intraday for a couple of days. Someone might be buying it off the daily chart and looking for a week or a couple of weeks of a move. Someone might be looking at it on a weekly. So there's so many different time frames. It's good just to cover everything to see if everything's lining up. If the weekly's heading south and it's correcting, you wouldn't want to buy it off the daily chart, because the potential that it's going to stop and reverse on you is gets higher. You want the weekly to be in your favor, which it is on this chart. It is on ASL at the moment on the weekly. It's in your favor on the weekly. The daily is still in your favor if it breaks through that level. So technically, it's not looking too bad. It's just that, how much weight do you put to that last move, that rejection candle we're looking at. All right. Thanks very much, guys. We'll be back in on Thursday at 12:30 again. Same bat time, same bat place. And we'll see how the market fares tonight, the next couple of nights in the US. See if they can hold up, see if we get a bit of a bounce tonight. The fact that we're up 22 now, that's nice, that's handy. Leads me to believe that we're probably going to get a bounce in the US tonight. We tend to be leading their market, and I think we did the same thing last week. We held up on Monday after they got sold off, or Tuesday we held up. They were sold off. We didn't react the same, and I think the US bounced after that for a few days. So let's just see if we can get a bit of a bounce in the US and see what happens from there. But anyway, thanks very much for joining me, guys. We'll speak to you again on Thursday. Cheers, bye.